Good morning and welcome to MEPS International's Policy to Price webinar focused on CBAM. We're going to take things a little steadily to start with as we admit people into the meeting. We've got quite a crowd joining and it's a presentation that we want everyone to benefit from, so we'll just set off rather slowly initially. As you'll see from the picture, your host today will be MEPS International Steel Market Analyst Jon Carruthers-Green, our CBAM expert and an old hand not only at webinars but podcasts. I am MEPS International's Managing Editor Tom Sharp. I'm responsible for the publications that we produce and also all our online and social media content. My involvement today is simply to guide you through the webinar process. I'll be introducing Jon, that's the process we're going through now. And at the end, of course, I think as we've explained, there'll be an opportunity to have a question and answer session. So we want people to be involved in that. If we could just go through a few of the housekeeping measures initially. As I say, we expect the webinar Q&A to come at the end. After Jon's presentation, which will probably take approximately 40 minutes. The full session will be recorded and you'll be able to access that afterwards. All attendees, as you will note yourselves, your cameras have been turned off and your microphones muted. Equally, the Q&A section is separate to the chat section that Teams functions. The chat has been disabled as we're anonymizing all participation in this webinar to allow people that open forum to ask questions and gain the feedback that they need. If you do have a question, go to the Q&A section at the top and submit that there, and we'll hopefully get to it at the end. We do already have some pre-submitted questions to get through, so it's great that people are already very much engaged in the process. And we'll get through as many of those as we can within the 1 hour time frame that we've set for the podcast. Throughout Jon's webinar presentation, he will be asking a few questions of attendees. There'll be multiple choice questions operated on a polling basis, and we'd really welcome any feedback. There's only 3 quick questions, I believe. And they'll take a matter of moments just to click a button, but Jon will make very clear when you've got that opportunity. In the process of the webinar, if you do encounter any technical issues, please try leaving and rejoining. And if you encounter any persistent issues, then reach out to MEPS. You can contact us directly via a link on the website if you go there. But having said that, there will be a recording made available afterwards, so you'll be able to catch up. And of course, the team at MEPS are always open and welcome to answer any questions that you might have subsequently. Jon, before we go ahead, I think I wanted to mention that this is a presentation based on something that you already produced with IA CBAM. So for those that might have sat in on that, you will get the opportunity of a Q&A at the end, of course, but you may want to duck out if you've already seen some of that content that Jon previously produced. But without further ado, I'll pass over to Jon and we'll get started so we can get through this webinar presentation. Jon, take it away.
Thank you very much, Tom. Thank you once again for such a wonderful introduction, and thank you everybody who's joined us today. I know it's a Friday. I know you've got sort of better things to do, but what I'd really like to do is hopefully sort of share some of the knowledge that we've learnt around CBAM and hopefully try and answer some of the questions that you'd likely still have. So I know that a lot of the people here attending today are MEPS International customers. So I won't run through all of the MEPS slides. We don't think we need to waste too much time with that. What I'd really like to do is pretty much sort of crack on and get this presentation started. So let's have a look what I want to talk about today. So really my aims today are to focus on this from a steel point of view. So I know there's been many other products that are being affected by CBAM, but it seems that the vast majority of those are iron and steel products. And with MEPS International being so sort of closely interwoven with the iron and steel industry. That's where my focus is going to be. So to begin with, I'm going to start by reviewing the information that was released in December. So the European Commission waited until 2 weeks before the definitive period started to release a tranche of information which helps us to begin to put some of the pricing information together, where we could actually go from complete uncertainty of CBAM to maybe reducing those errors just a little bit more. So two key bits of that I'm going to touch on are the free allowances, also known as the European benchmarks, and then the country-specific default values. So those formed the bulk of the information that was released in December. And as I say, these are two key bits that we need to know in order to work out what any CBAM liability is going to be. There are still some unknowns, and when we're looking at price, how this is going to affect price, the two big key ones are the evolution of the EU ETS price, and then also any carbon charges that are paid in a third country. So I'm going to run through just what we do know about those and what we don't know about those. We've also heard quite a lot of feedback already during our monthly research calls from people who are importing goods into the EU. So we'd just like to touch on some of the points that they've told us, some of the ways that they're sort of reacting already. And then what we'd like to do is try and sort of quantify what this information is really going to do and how this is going to affect steel prices, or import offers at least. I'm also going to touch briefly on the difference between these default values and then the actual emissions values which could be used. And then finally, we're just going to run through some of our price forecasts for what we're expecting the prices to, what we're expecting CBAM to affect European steel prices over the next 12 months or so. But before I do go on, this is what I'd like to introduce now is the first of the polls that Tom mentioned. And it's really just to try and sort of gauge your preparedness, your understanding around CBAM. So let me just move that on there. And if I go to the poll, sorry, this is the first time I've added a poll in a meeting like this. So we should be able to see very soon on your team section, a quick question asking, how prepared is your organization for CBAM implementation in 2026? Okay, I can see we've had quite a few answers there. And I hope you can see the results as well. Can you see those, Tom?
Yes, yeah, we can see those results.
You've got those, fantastic. Yeah. Okay, so somewhat prepared. I think at this stage, I think that's a fairly good answer. I think the to be able to get to very prepared, there is a much higher level of engagement that's going to be required in businesses. So thank you very much for everyone that submitted their answers there. So let me try and take this off the screen. And Tom, just let me know if that hasn't disappeared. Right.
It's just the poll slide.
Just the poll slide. Okay, right. So we're going to move on now. Let's get on to the actual the meat of this presentation. So just a quick recap of where we are now. We're in the start of the definitive period. And I've taken this from the very celebratory message that the European Commission published. I think it must have been about 1 or 2 weeks into January. And it was really sort of quite congratulatory that CBAM is now here, it's now in force. The definitive period started on the 1st of January. And they were quite pleased to confirm that around about 1.6 million tons of CBAM goods entered the border within that first week. What I think was absolutely key for us is the fact that 98% of those products are iron and steel products. So overwhelmingly, CBAM is affecting our industry. They also confirmed that around about 4,000 declarants had been approved or pre-approved before materials being released, and also mentioned that the key exporting countries were Turkey, China, and India. And of course, they are essentially the largest exporters into Europe for the vast majority of steel products. So just going on and having a look at some of that information that was released in December. Some of it I'm going to touch on today. And as I say, a lot of the stuff I'm going to focus on is going to be how it's going to affect prices. So in scope today are going to be these default values, these free allocations, and then that ETS pricing. Also going to touch on how this is going to affect downstream goods, and then the EU's intention to bring in further iron and steel products into CBAM. What I'm going to try and avoid today is too much of the technical registry kind of side of things. So we also got several documents that covered a lot of this information. At MEPS International, we really focus on how things are affecting price. There are other companies in sort of the CBAM sphere who can help you with issues around about registering for becoming an authorized declarant. And if you do have any questions around those, get in touch a little bit later on, and I'll forward your information onto some of these companies that we've been working with recently. Okay, so when it comes down to price, there is a whole series of formulas that I've seen that really sort of works out how we go from emissions to cost. And there are different ways of breaking this down. What I'm aiming here to do is to try and break this down in a fairly simple way, but also in a manner that's going to give you enough detail that you can actually make some intelligent decisions based on this. So there's 4 key sections to this. As I say, there is a little bit of nuance to some of these, but I think the 4 key elements that we need to focus on are, first of all, the emissions associated with the products that you're importing. That's really the sort of starting point for any of these calculations. There's also the free allocation, those European benchmarks. Now, they really give us a baseline for what the European Commission considers to be the cleanest steel being produced at the moment. The combination of those 2 figures really tells us how many CBAM certificates we need. And you can think of CBAM certificates as the currency of CBAM. 1 CBAM certificate essentially covers 1 ton of CO2 emissions. Now, we'll see a little bit later on that a ton of steel may involve more than 1 ton of CO2 emissions. So the interaction between these supplier emissions and these free allocations is going to be key. The next part I think is really, really important is the EU ETS price, the EU carbon price. What this really does is it tells us how much each one of those CBAM certificates, how much that carbon is going to cost. And I think this is as we go further through CBAM, this is going to be the key measure, the key part that determines just how much you'll be paying. The final bit that I'm going to be touching on today is the 3rd country carbon costs. So what the European Commission has said is that they're not planning on double taxing people. They don't see CBAM specifically as a tax or a levy or a charge on steel products. What they're trying to do is to apply this cost to carbon that's emitted during the production process. So what they've said is that 3rd country carbon that's paid for in the exporting country can be taken off here. And I'll go into that in a bit more detail a little later. So let's focus on the first part there, the supplier emissions. So now that we're in the definitive period, importers don't just declare the emissions associated with their products, they will also have to essentially pay for these. And currently, there are sort of two methods that that can be used. There is the ability to use the default values, or there is also a little bit further along, there'll be the option to use actual verified emissions data. As we're starting the scheme, everybody will be sort of steered towards using these default values, and I'll just explain that in just a second. So let's have a look at the reason for using the default values. And that the way that these have been set up is that each product, each iron and steel product, has been given a default value. Not only that, but each country has been assigned a specific default value. And these default values are based on an average emission intensity of the exporting country. Now, the information that the European Commission has used to set these figures, I guess you can challenge that. I guess that will be challenged as we go through CBAM. Not only will it be challenged as to sort of its accuracy, I think the Commission is looking to also review and replace all of this information as we're going through. So in December, they released a document about 1,600 pages long, which line by line touched on each one of the steel products, each one of the steel categories, and gave us a default value. So this is an assumption for how much CO2 is being emitted in a ton of any particular steel product from that country. And when we got those numbers, the first thing we did, the first thing anybody does with those, is pop them into an Excel spreadsheet. And it gave us the ability just to sort of do some very quick sort of analysis on those. And it's quite clear, quite obvious that there are some big differences between countries. Some countries get relatively low emissions values, whereas some countries, Taiwan, for example, for its stainless steel, received an incredibly high figure. I'll talk about that in a little bit more detail when we look at each one of these specific products. But essentially, what's going to be key, just like the country origin when we're looking at, say, the steel safeguards, for example, that is going to be key if we're relying on these default values. It may be that when we factor in CBAM costs into the overall cost model, that the difference between these emissions values could make one country actually cheaper than the other, even if it's their standard base price for the steel product isn't quite as competitive. So as I say, these numbers are provisional. They are going to change. They're going to be revised. I expect there's going to be various types of revisions. There's going to be revisions because some of these numbers, like I say, they just look wrong. There will also be revisions as the European Commission tightens the CBAM methodology and gains more accurate data. Part of the reason for these default values being so high is to promote the use of actual emissions data. And once that emissions data has sort of been brought in and there's been a chance to actually sort of study that and verify that, I expect that some of these numbers will be tweaked as we go along in response to that. So let's talk about the other way that you could calculate supplier emissions, and that is using actual verified data. Now, this process is certainly more complicated than using the default values. Using the default values, like I say, you refer to the number in a spreadsheet, you perform your calculation, and it spits out a number. Using actual emissions data involves speaking with suppliers. It involves getting their mills, their production processes verified. It involves getting the company that does the verification, getting them authorized so that they can actually perform these verification visits. And this is the big problem at the moment when it comes to using actual data. While many mills have already gone through this process themselves, while many companies, particularly some companies that we've spoken to in South Korea, have been very sort of progressive with this, they understand the emissions emissions at their sites. They understand the emissions associated with their products. What we don't quite know right now is how that information will be incorporated into actual verification of these visits. Verification of these sites. So we're still in the process where the European Commission is setting up a list of companies who can go in and do this verification. That list, those companies, we're not expecting those to be announced until July of this year, and we're expecting that there's going to be quite a rush of companies that are then going to be trying to get use their services to get their emissions verified. The legislation that's been set down is that in order to use these actual emissions, the site itself must have a verification visit in that first year. So while the CBAM charge, while the payment is sort of delayed a little, there's no actual sort of payment due until, say, September 2027. There's going to be a bit of a rush between this period in July 26, where you'll be having to use this default information, to getting these plants actually sort of the emissions information they have there, getting that verified. So we expect there's going to be a bit of a mad rush from the second half of 2026 up until the second half of 2027, where these companies are going to be sending people all over the world. Where, as I say, we're expecting a lot of these larger suppliers to be quite ahead of the game with this. We're expecting them to come with all of their homework done, essentially. So we're expecting these larger suppliers to get through that process a lot quicker. It also really benefits these larger suppliers because they'll potentially have more than one customer. And remember, it's the sites that need to be verified. So while the importer needs the data, they'll be putting pressure on the producer company, on the exporter, to get this information. And if you've got, say, 10 customers, 20, whatever the number is, it's really going to be the onus is going to be on these supplying companies to complete that verification. So as I say, we're expecting some of these larger companies to get through this process fairly quicker. It's when we look down at, say, the second or the third tier companies that the chances of this verification being done in time looks a little slimmer. And remember, if this isn't done in time, then the fallback is using that default country-specific emissions values, which are set just that little bit higher. Okay, so that's just a brief introduction on supplier emissions and how they can be dealt with. The other thing that we need to look at is the free allocation, is the European benchmarks. Because what this essentially does is, this is the amount of carbon that is assumed is produced by one of the more efficient European mills. And essentially, this is the number you can take off that overall value. And this is essentially the part of the bill that you can get a discount on. It's not a complete discount, not 100%, as we'll see in a second, but any emissions below this free allocation are charged at a much lower rate than those above that. So let's just have a look at those in a little bit more detail. So the European benchmarks are set and based on the equivalent an equivalent product being produced in Europe using the cleanest technology available. They're really set based on sort of the 10% cleanest EU producers. So once again, while this numbers was published by the Commission in December, we'll also expect this number to be revised at some point between, as we go through the CBAM scheme. The other thing that's going to happen with these free allocations is they're going to be phased out. So in order to incentivize European producers to produce steel in a cleaner manner, this benchmark, this baseline is being reduced. And the way that this interacts and affects CBAM is that as these free allocations are reduced for European steelmakers, the exact sort of mirrored effect will be happening for importers. So in that first year, in 2026, essentially what your calculation would be doing is reducing 97.5% of that benchmark value from your overall cost. Of your overall cost up to that mark. So the way I like to think about it is sort of like marginal tax rates. So if the emissions are below this benchmark or at this benchmark, you can consider your CBAM charge to be around about 2.5% of that number. Then once we go over that number, your marginal tax rate goes from 2.5% up to 100%. So it's going to be really, really key if you're looking to reduce your CBAM liability to find a producer whose emissions are as close to this benchmark as possible. And as I say, this benchmark is going to get reduced over the course of the next few years. So it's going to drop to 5% next year. It's going to drop to 10% in 2028, and that's going to gradually decrease until that hits 0 in 2034. Just to make things a little bit more complicated, for carbon steel, there are 3 different numbers that could be used for these benchmarks. There's one that covers the blast furnace route, one that covers sort of DRI route, and finally another one which covers scrap EAF route. And each one of those is markedly lower than the other. For stainless steel, the methodology for these free allocations, it looks like they are a little bit different. What we've got in this recent release was one benchmark for 2026 and 2027, and then another benchmark figure for 2028 to 2030. Now, we started to sort of scratch our heads a little when we saw this figure first being released, until one of our stainless specialists in the office came along and basically said to us, pretty much all stainless steel products in Europe are produced by EAF, so there's no need for these different production routes. So what the Commission is essentially doing here is assuming that lower emission, that cleaner route. So that's why we see this methodology slightly different for stainless steels. The one thing I would say for this is this part of the equation. This really sort of decides how many of these CBAM certificates that you need. The other part of the equation we need to look at is how much each one of these CBAM certificates is going to cost. So that's what we're going to move on to next. So the price of each one of these certificates is based on the EU ETS price. Now, this is a scheme that's been in play in Europe for around about 20 years now and has covered various industries, and it's really being sort of extended to the steel industry from 2026. This is why CBAM's sort of happening now. I think the important thing that you can think of it though is this is the multiplier. This is the key bit that isn't really going to change. The methodology for this isn't really going to change as we go through CBAM, and this is going to be in my mind, the biggest determinant of how much you'll be paying in the long term. In the short term, the supplier emissions, the free allocations, they might be a bit more important, but going on long term, for me, it's going to be this carbon price. So let's have a look at that in a little bit more detail. As I said a little earlier, one of these CBAM certificates covers 1 tonne of CO2 emissions. The price is essentially going to match the EU ETS price. And if you don't know that acronym, you may have heard this as carbon credits or cap and trade. There are various different names that this sort of comes under. But these costs this price has been tracked for quite some time. You can get some charts that go back to around about 2005. One thing I would say is that the price quite recently has been very volatile. We saw some spikes. I think it was mid 2023 that we saw that spiking at around about 105 euros. Since then, it had sort of steadily dropped until April 2025, where that dropped at around about 60 euros. What we've seen since then, at least until mid-January, was a steady rise of this EU ETS price. And just before the Commission dropped a lot of this CBAM information in, that price had got up to mid-80s, about 85 euros for a tonne of CO2. Immediately after that information was released on the 16th of December, that gained a further 4 euros, I think it was. Then we saw it steadily rise until mid-January. I think it peaked there at around about 92 euros. Since then, we've seen a few politicians sort of walk back from the importance of the EU ETS price, the importance of rolling this out to many industries, and that has taken quite a nosedive. So I basically ran through this presentation at the end of January, and the figures I was using then for all of these calculations I'm going to show you in a minute was around about 89 euros per tonne. The reason for using that figure is because in this first quarter of 2026, the way the Commission has set up the scheme is they're going to use the average price for the whole of this first quarter as the price for the CBAM certificates this quarter. So essentially, from January 1st to March 31st, the average of those prices is going to be taken, and then in mid-April, that's going to be published. So as I say, what I was trying to do in order to make my figures accurate was use the average of the quarter to date, and that was 89 euros just a few weeks ago. I've done the same calculation when updating these slides yesterday, and the figures I'm going to be using today, I think they were 84 euros. I'm not going to try and do a forecast for exactly where this is going to end up by the end of the quarter, but remember, as I say, CBAM certificates, the price of those will essentially be based on the price over the average over this first quarter. I've seen various forecasts suggesting changes to these prices over the next few years. I've seen some that suggesting we're going to see a bit of a further dip in 2027, but pretty much all of the forecasts I've seen have suggested that this price could reach around about 120 euros by 2030. Okay, so the next thing we need to look at, the next sort of factor that needs to be considered is whether this carbon has been paid for in a third country. As I say, the EU Commission's whole rationale and main defence if the CBAM measures were to be challenged at the World Trade Organization is that this is a separate charge, not a tariff on the products being imported, but a tariff on the emissions being associated with them. So what they've said is they do not want to double tax these carbon emissions. What they are happy to do and what they intend to do is to reduce the CBAM liability in Europe for any carbon costs that are paid in third countries. Now, there are a few complications to this approach. The EU is essentially sort of leading the way with carbon pricing schemes, and certainly has the most developed legal framework in place. So currently, most countries don't have an equivalent scheme in place. So India, Vietnam, I think are the examples we've got here. Some other countries are a little bit sort of further ahead in calculating carbon costs. So China, South Korea have gone some way towards applying these carbon costs to their energy industries. To their energy production. Not so many places have gone as far as looking to broaden those to various other industries. Two examples of places that have are going to be the UK, which is currently in talks with Europe on how to align their ETS scheme. Now, the UK is a little bit more advanced than many other countries because we essentially inherited the ETS scheme that was in place in Europe when we left back in 2021. Since then, there's been a bit of a divergence in the legislation. There's been a bit of a divergence, therefore, in the price of carbon. So one of the things that's currently happening at the moment is talks between the UK and the EU to get that scheme a little closer aligned. And getting that aligned is not essentially going to reduce the amount of the charge, but it could potentially reduce the administrative burden. As I say, what the Europe's CBAM scheme is essentially going to do is going to put an upper limit on this carbon price. And the European government doesn't really mind whether this carbon price is paid into Europe or if it's paid somewhere else. What they're really trying to do is make sure that carbon is paid for somewhere in the scheme. What we don't have as well is full guidance on how this pricing, how third country carbon pricing is going to be incorporated. So further guidance on this is going to be released by the Commission. They've said, I think it was by the end of the second quarter, but in the next couple of months, we're expecting some more information on how that's going to be managed to be released in more detail. So that's, in my mind, that's the final sort of piece of the puzzle, as it were, and that really sets up going from the emissions and the free allocation and the carbon costs to finally giving you an idea of what the final euro amount would be. And that's essentially what's known as your CBAM liability. And just to sort of recap all of that section there, the liability is paid on goods that come through the EU border that are on the list of 6 categories that are covering CBAM at the moment. And possibly the key bit of information is that at the time that clears customs is going to be the import date. That's going to be the date that's going to be used on paperwork. That's going to be the date that's used to determine which quarter it's brought in, or as we go a little bit further into the scheme, which week, which day that is going to be brought in. And that's going to become important because that's going to affect the carbon price that's paid. One thing I forgot to mention earlier was that while in this first quarter we've got a quarterly average, that's going to move to a weekly average as we get further through the scheme. So these CBAM certificates, there's a process to these. They are purchased and then they are surrendered. So that purchase is something that needs to be done. And I believe currently with the omnibus guidance, you must purchase 50% of your CBAM liabilities and have those available by the end of the year. And the second part of this is the surrendering of these certificates. So in this first year, the surrendering process happens in September 2027. And that's really when the cost is going to hit. And I think the key point to drill home is that this cost is going to vary significantly, whether it's by production route, energy mix, country of origin. Now is the time to get on top of this information if you're not there already. What I'd like to do next is move on to some specific examples of various sort of CBAM costs. But just before I do that, the way that we've sort of been calculating these internally is we've sort of set up a bit of a rough and ready CBAM calculator that we've been working with. It started off, as I say, on an Excel spreadsheet. We've then moved on to something a little bit more involved, a little bit more grown up. We're currently using that internally, so anybody who sort of speaks with our research team, they'll have access to this. What I'd like to know, though, is whether this is something that you would find useful. If we have enough interest from customers, we may get to the point where we look to roll this out to everyone. So just so I've got something to go to our commercial team, I'd be really interested to know whether you're interested in having access to a CBAM cost calculator. Okay, so it looks like we've had around about 180 responses. They still seem to be coming in, and I'm going to average those together and say 95% of you are saying yes, 5% of you are saying no. So thank you very much for answering that. I can take that to our commercial team and see if we can get that pushed out just a little bit quicker. So let's just move on to some specific examples of CBAM costs. Now I've picked 4 different product categories, and the first, of course, is going to be hot rolled coil. This is the largest product category for tonnage wise.
Do we still have the poll in front of people? Just double check. No, that's dropped down. That's okay.
That's gone?
Sorry.
Fantastic.
I thought we had the poll questions there. Sorry to interrupt.
Thank you. No. Hot rolled coil is the largest finished product imported into the EU by tonnage. I think last year we're currently looking around about sort of 7-8 million tons in total. Now the EU is also planning on changing the steel safeguards, so of course these numbers are going to be affected by that as well when we get to July next year. But I just wanted to show you this because what I've got here on this chart is the 5 largest exporting countries by tonnage. And what I really sort of think this really sort of hammers home is that there is quite a range to the potential CBAM liability. So just talking about this in a bit more detail, I've got the import tonnage there. I've got the free allocation, so that's the benchmark figure. That's standard across the board for hot rolled coil. Then this is the bit that gives us big variation in numbers right now, is this country-specific default value. So I think we can all see that the one that really stands out here is India. If a company was to use these default values on their paperwork, they could be picking up potentially currently a CBAM liability of around about 285 euros. Now, at the moment in Europe, a ton of hot rolled coil is trading around about 645 tons. So in percentage terms, that's astronomical. I think the other thing to focus on here is that EU ETS price. So that second to last column. As I say, when I was doing this just a few weeks ago, I had the number 89 in there. So as that was the average of the quarter to date. Like I say, over the past few weeks, the price has really sort of plummeted. And I think we've got back down to now. I think the current price is in the low 70s. But I've used this 84 figure because that is the average of the quarter to date. As I say, if we continue the rest of the quarter with a slightly lower figure, then this multiplier, this second to last column, could be a little bit lower. But still, it shows that no matter where you are, you will be picking up some kind of CBAM charge. Next product to move on to is metallic coated sheets. That's the second largest product category. And once again, we're seeing a very similar pattern. Some countries have much lower default values, others have much higher figures, and this ultimately affects that overall charge. Let's move on. I just looked at the time. Let's move on a little bit quicker. So wire rod. This one is another one that I thought was quite indicative to pull out and use. So this is another large product category, and there's two bits on here that are key to looking at. Remember, these countries are ranked in order of import tonnage, or export tonnage, depending on your point of view, into the EU. And for me here, obviously Switzerland stands out. That's because Switzerland, their scheme is aligned with the EU ETS scheme. So essentially the assumption there is that all of these carbon costs are covered within that scheme. So if you're importing from Switzerland, there would essentially be no CBAM charge. That would all be dealt with within the ETS scheme. The other one on here that I think is quite interesting is Moldova. And the reason that that's interesting is because when we looked up Moldova on the chart, there wasn't actually any figure for Moldova for wire rod. So what you have to do in that instance is you use the other countries and territories category. Now that's an averaged figure and is generally a little higher than a lot of the other specific countries. I couldn't go through any presentation without referring to stainless steel and helping out our friends in the Stainless Steel Club. So I've got some cold rolled coil products here. I think that the key one to talk about here is in fact there's two that are quite interesting here, and the first one is going to be South Korea. And the reason I'm saying this is interesting is because we've spoken to various mills over there who are quite sure that that their emissions are much lower than these default values. So we've spoken to some mills that have gone through their own internal verification process and that are suggesting that their emissions are around about 1.4 tons of CO2. So that would be much lower than this default value. So that would massively reduce the CBAM liability if they were to get those emissions verified in time. The second one to look at here is Taiwan. Now the figure there for Taiwan is astronomical in my mind. It's higher than the most punitive of the other numbers, the country not specified figure. If you were unable to say which country you were importing from, you get an incredibly high punitive figure of around about 9.53. And Taiwan's figure for the stainless cold rolled coil comes in even above that. I think this is a great example of one of those figures that's going to be changed fairly soon. So let's move on very quickly to how we've seen importers reacting to these CBAM charges. We've seen a variety of approaches, and when I say seen, our research team has actually had conversations with people who are doing this, and they've come through with very sort of different manners of approach. We've seen some companies that are happy to use these mill-supplied, pre-verified emissions values. They're happy to use those in their calculations. We've seen some that are going to be using happy to use the default values at the moment and suggest that they're just going to pass these costs on. I think one of the more interesting ones is that we've also seen a lot of people suggesting that they're going to move to DDP delivery terms with the hopes of moving all of that liability to their supplier. Now, this is one of those things I'd be very, very wary of. I think the devil is going to be in the detail in all of these contracts. Just as I said before, with CBAM being a charge on carbon and not on the product imported, I think you're going to have to look through the very, very fine print of any one of these deals to see whether that's included or not. Essentially, CBAM is a new scheme, it's a new type of tax, and I'd be very, very wary of just using those contracts without going through those in sort of fine detail. The liability doesn't appear until mid-2027. So if you're relying on that method, it may be that there's a little bit of a surprise come September 27. We've also spoken to some suppliers who are planning on sending their cleaner material, the emissions, the material that they can get as verified cleaner, get that sent to Europe and send some of the other material elsewhere. We've also seen some people, some traders in particular, looking to incorporate the list of countries with lower specific default values and looking to maybe move supply across to them. But the vast majority of people that we speak to simply remain confused by CBAM. There is a level of understanding, but for some it's higher than others. But I think at this stage, it's natural. We haven't got all of the rules set out yet. We've started the game before knowing the rules of the game, really. One of the things I'd just like to touch on before we go on to the last couple of slides is the EU also signalled an intention to expand the iron and steel products that are covered within CBAM. So we started off with some fairly broad categories, looking at sort of finished products, finished steel products, essentially a lot of the same material that's covered by the steel safeguards. But one of the things that they did suggest in their document release in December last year was that they're going to expand this to cover downstream goods. This will not happen until 2028 at the earliest. The Commission has proposed including all of these categories, and they've included them because a lot of these products contain a lot of iron and steel within them. This would still have to go through European Parliament and the rest of the legislative process, but this is what the Commission would like to target next. So we've seen some really big numbers there looking at CBAM charges. I'd just like to finish off with how we actually expect this to affect European prices over the next few months. So what I'm just going to show you now is a couple of charts that have a bit of history for hot rolled coil and rebar prices. And what it really sort of shows was that in late 2025, we had in the first half of 2025, prices were trending down. Second part of 2025, for both hot rolled coil and for rebar, those prices started going back up again. Now, there are other reasons to this, but we essentially think that the main reason for these prices going up was this uncertainty around CBAM, was that lack of knowledge, that lack of information that really put people off importing. If they had the opportunity to realign some of their supply chains, they were beginning to take it. And what that meant was that the European mills were able to sort of respond by pushing up some of their prices. Now, there's two parts to setting a price. There's that supply and there's that demand. So what we really saw was we saw a restriction in supply was sort of causing this increase, or a potential restriction because people were a little bit wary of importing these goods. What we haven't seen though is an increase in demand. So what we're expecting over the next few months is that this price rise will continue. We're expecting this price rise will continue at least until summer this year, mainly on the back of this this restriction on supply. What we aren't really seeing at the moment is any large increase in demand. So the one thing that we have seen, EURIFER, the number I'm referring to here on about halfway down on the right hand side of this slide, is EURIFER have suggested that steel demand in Europe is going to grow by around about 3.2%. So I think that's still a little bit optimistic personally, but on the demand side of things, I think we're approaching sort of the bottom rather than having sort of reached the bottom. So like I say, a lot of the price rises that we're expecting over the next few months are going to be related to this restriction in supply. The other thing that may come along and change these forecasts is we're currently assuming that the European Commission is going to increase their quotas broadly, their safeguard quotas broadly in line with the methodology they set out in their proposal. So that's one of the other big underlying assumptions for the second half of the year. And it's essentially sort of that lack of demand that we're seeing sort of in the European industry for the reason for these prices not to keep growing through the second half of 2026 and that start of 27. But as we get more information in, we'll be updating these forecasts, and with our forecast team trying to keep ahead of a lot of these trends. So we've talked about some of the effects of CBAM, some of the price implications of CBAM. We've had to look how that's going to affect European prices. I'm just going to finish up just by going over some of the key points that I think are most important for you to take away. And first of all, that's CBAM's here, CBAM's staying. CBAM costs are going to be hitting you soon. CBAM's costs have started to accrue, and they will become due in September 27. The default values, the information that the European Commission has released, provides a worst case scenario. What they're really pushing for with these high default figures is for suppliers to move to actual emissions. We're expecting that once we get through that process, actual emissions will be much, much lower than these default figures in the majority of cases. So there will be a lot of incentive to push your suppliers to go through this process and get that information. And I think that's, like I say, that's part of the reason for these really high numbers. In the meantime, though, the CBAM costs, the CBAM liabilities will reduce import volumes and market supply. And this is what's going to keep prices in the European market in 2026 a little bit higher than they were last year. Thank you very much for listening to me. I realise I have gone on a little bit longer than I really intended to. What we can do, though, is extend the Q&A. So anybody that does need to go for 11, feel free to do so. But anybody that would like to sit through the Q&A, we're gonna run through that just now. But I do have one final question for you, and this question is really to sort of help guide us with any sort of future potential CBAM related webinars. So if I could just ask you what your biggest CBAM challenge is right now. Okay, so I can see the answers are a little bit more involved on this one, but they're still coming through. Okay, so the one that's currently leading there, forecasting total cost exposure. I'm very glad that that's the one that's came up. Hopefully today will help you answer some of those questions. If we haven't covered everything that you need, I've tried to keep this at a level where we can probably help the most people the most. If you need more detail, feel free to get in touch with us after the talk. I'll be sending out these slides later. We'll be putting this video on our YouTube channel. If you do need to get in touch with me for any sort of CBAM related questions, then you'll have my email address there, and that QR code will also take you through to me. So thank you very much for spending the time with me today. Let's go back. Let me stop sharing, and we'll go back to Tom for these Q&As.
Jon, well done. Thanks for that presentation. Hopefully people took lots of actionable insight from that. I mean, really clearly explained, I think. I'm glad I've got you as a colleague to tap into for much of the time at MEPS, but for others who have dialed into the webinar, they want the opportunity to pose a few questions, and we've had quite a lot coming in. So as Jon says, despite the fact that we've run slightly beyond where we intended after 11 o'clock UK time, we will hang on for a few minutes just to address some of these pressing questions that people have. Jon, I hope your voice is intact after all that presenting.
And a couple of sips of water, we're good to go.
Great stuff, well done. So I'll start off with this one. I think it may already have been addressed in the presentation, but a reminder for people, if not, or if they missed that. We've been asked which price will be applied when the ETS is purchased. I guess that's the carbon certificates in that respect.
Okay.
The time of purchase of the ETS, the carbon certificates, or the price of the ETS when the material was dispatched? It's a good question.
Yeah, good question. So it's when that material. So there's two key dates here, and essentially in this first quarter, it's going to be when that material lands. That's going to be the most important date, when that's sort of cleared through customs. You do, however, have the opportunity to purchase these CBAM certificates at any time during the year. So in this first quarter, so to begin with, what's going to happen is these CBAM certificates are going to be based on this quarterly average. So what we don't know is whether this quarterly average is going to be sort of slightly higher or slightly lower between Q1 and Q2. So that's the sort of the current risk. As we go forward, though, the price of the CBAM certificates, it's going to go down from sort of the average of the quarter to the weekly price. So then it's going to become much more important. So you get to choose which week that you buy these certificates. And so long as you have enough certificates to cover 50% of the emissions associated with your imports, you can buy those at any point during that. This is why we've seen a lot of companies looking to potentially hedge those prices. That's not something we're really getting into at the moment, but we have seen sort of other companies really sort of taking the lead in that.
Okay, thanks for that, Jon. Like I say, I'm just looking through the multitude of questions here, so I'm just trying to pull a few out. The next one, for an installation to verify its emissions, that process that's going to carry on and way into the distance, I suspect. Is it essential that the emissions of the precursors are verified, or is it possible to use a mix of actual and default values?
So they're really trying to push to the point where all the precursors are verified, but there is sort of this sort of hybrid approach, because CBAM verifications all based on particular installations. So you could have one part of the process verified, you could have another part of the process reliant on these default values. Once again, the default values are usually a lot higher, and if you are using this hybrid approach, you will have a lot more sort of paperwork to deal with. Eventually, once this all sort of settles down, the idea is that it's all using actual reported data.
Okay, I've got an interesting one here. It might call you to just speculate a little, comment on the methodology applied by the European Commission, but an interesting point of conversation. By having much lower benchmark values for EAF supply, this will surely penalise supply from clean.
Yeah, that was an interesting interesting part of the methodology. I think initially, yes, it does potentially penalise them, but I think that's also sort of fairly short-term thinking. If you're eventually looking to produce to get material that's produced via an EAF, it's really the difference between the two values that's going to become more important rather than this lower benchmark. So I think that's really going to end up being sort of the key driver as we go on, is that difference between the benchmark value and then the default value or the actual emission. So that's going to be the key bit to look at, I think.
Okay, good answer. Thanks, John. So keep them coming. Keep people engaged. Do hang on as long as you're interested in the Q&As. It is in what people themselves are interested in on the call, so hopefully give some useful feedback. So next question. If an imported steel good has CO2 levels below the CBAM benchmark, will the CBAM cost be zero? If so, how would this be mirrored in the EU ETS if the low CO2 steel was produced there?
Okay, so unfortunately, it won't quite be zero. Basically, all the emissions below or up to this benchmark will be charged at a vastly reduced rate. So in 2026, up to this benchmark, you'll be charged at 2.5% of that ETS price. You know, it's simple terms. So 2.5% of that 84. So what we're talking around about 2-3 euros, something like that.
Yeah, so very minimal fee.
So it'd be a very minimal, but it would be there, and it would be something that you've still got to register if you're over all the import thresholds. You'd still have to report on, but that CBAM charge would still be there. So anything below that threshold is charged at this reduced rate, and then like marginal taxes, anything above that threshold gets the full 100%.
Okay, that makes sense. Okay, well, next one for you, John. When will the legislation on verifying emissions be released? Again, something I think we've covered in the presentation, but worth a reminder.
Sure. So the Commission has committed to having a list of verifiers published by July 1st. We did get a lot of the legislation around the process released in December. But the actual list of companies, the actual first ones of those, the Commission's committed to releasing by July. And then we still expect there's going to still be a little bit of a delay between that list going live and these companies, their services being engaged, those first site visits. But I expect it's going to be a very exciting time if you live in the verification world in the second half of the year. You'll be all jet setting all over the place, because remember, we do need a site visit in that first year.
And of course, at MEPS, we do know, globally how complex the steel supply chain is. I guess there's a real risk that smaller suppliers, in particular smaller producers, might be left at the very end of that verification process and may not even be verified in time.
Exactly. Yeah, that's a great point. Like I said during the talk, we've spoken to some mills that have gone through this process internally, are very sure of the figures that they're producing. They have been getting ready for this, not just because of CBAM, but because they've got similar kind of schemes potentially in the works in their own country. So like I say, I referenced South Korea a few times. The people we've spoken to there are very confident in their numbers. So the interesting bit is going to be exactly how much exactly what that verification process entails and how much of that work that they've done already can be included within that methodology. But yes, there is this big risk that those further down the chain, those who have been putting off CBAM, those who have been ignoring it, may not get verified in time. And the risk there is you'll be ending up having to use the default values.
Yeah, and quite a risk. Okay, well, we'll keep going for now. We've got a few more. Well, we've got plenty more questions in actual fact. But here's your next one, John. Quite a specific one here on a specific product. How will CBAM impact importers of large diameter seamless OCTG casing for oil and gas wells, a category that only has one European mill producer, which I suspect is the point that's being made there?
Yeah. Okay, I'll be perfectly honest with you. I cannot remember the default values for all of these different products in all these different countries. But the key bit is that bit right at the end there. It doesn't matter whether this material is produced in the EU or not. The Commission has been quite clear that this is a tax on carbon emissions. So whether there is a domestic producer or not has no bearing on this at all. So that goes for this product, goes for any one of the products. It's not about that protecting European producers. In the European parlance, it's about leveling the playing field. But essentially, it doesn't matter whether it's being produced in Europe or not. I think that's the key thing to take away from that.
Okay. Yep, next one, we'll keep them coming. I think we'll probably aim to wrap up at about 15:15, John. And have we got a tactic for answering questions after that point? Will we be able to take enquiries, I guess, just via the usual MEPS channels?
By the usual MEPS channels, and what we'll also do is we've got a full list of attendees. We'll send out the slides, and then when we have the recording available, we'll get that on our YouTube channel. We'll send out the link for that. But in those slides, we'll have my email address. We'll have a QR code there that should shortcut all of the having to type in emails and get you straight to me. So if you've got any questions, follow up, please.
Excellent. Okay, we'll continue with the questions. Some very practical ones, largely relating to the payment, I guess, at the end of the process. If my import has generated 1.1 tonnes of carbon, I will need 2 certificates. Can the 0.9 tonnes be used on my next import?
That's a really good question. That might be one you'd have to follow up. There is a whole process around the purchasing and surrendering of certificates. What I would say is that yes, I think the certificates are used in whole. Certificates that aren't being used, if memory serves, can be sold back to the Commission. There is going to be a process for that. Otherwise, they will expire. I think the only other thing to mention there is if you're only importing 1 tonne, you may be below the CBAM threshold anyway, because they've increased that to 50 tonnes of material. Yeah.
Okay. We'd have quite a cheeky question. I don't know if it's jumping the gun a little bit, John, as well, and it strays slightly away from the topic that we're covering here, but not entirely. How similar do we expect the UK CBAM to be to the EU CBAM that we've been discussing today?
I would expect the overall aims to be pretty much equal. The bits where we're going to see a difference is in how it's going to be managed. Now, the UK has released some guidance, some draft legislation just last week, actually, around CBAM and how they want to manage things. There are certain things that are going to be a lot simpler. They're not going to have certificates. They're not going to have purchasing of certificates, surrendering of certificates. This is all going to be dealt with via the usual HMRC tax methodology. It's essentially going to be another tax on there. They're going to be sticking with quarterly averages rather than weekly averages. So that, like I say, these fine details are going to be different. But I think one key thing to note is that the EU and the UK are talking about aligning schemes as closely as possible. And that's really to sort of reduce administrative burden, is what they're saying. So we're going to hear in the next couple of months how those talks, how those negotiations have gone on.
Okay, yeah, interesting, and something that's unfolding in the weeks and months ahead, I guess, as we get towards the UK launch in 2027. Jon, I think we're going to leave it there. I think we've answered quite a few questions. We're happy to take those enquiries afterwards via email or simply by calling MEPS. Throughout this, I think we've referred generally to the influence of CBAM on prices throughout Europe, but they'll also be reflected within our steel market reviews. And I urge people on the webinar who aren't already subscribed to keep up to date with all that information and our 12-month price forecasts. It's also worth mentioning that Jon and I often appear on MEPS regular Speaking of Steel podcast, which you can access via YouTube, Apple Podcasts and Spotify. It's worth taking a look there for a bit more conversation. But Jon, thanks ever so much for joining me.
Thank you very much.
Well done for getting through a very intensive period of talking there and delivering some really actionable insight, really useful.
Fantastic. Thank you very much.
Great stuff. Thanks for your time.
Thank you. Bye-bye.
Bye-bye.